Here are pros and cons of investing you have to keep in mind. 8 pros of investing. 1. Wealth accumulation. Investing allows you to grow your wealth over time through appreciation and returns on your invested capital. 2. Financial goals. It also helps you achieve various financial goals such as retirement planning, buying a home, funding education, or starting a business. 3. Beat inflation. Investing in assets that outpace inflation helps preserve the purchasing power of your money over the long term. 4. Passive income. Certain investments, such as rental properties, dividend-paying stocks, or bonds, can generate passive income, providing a steady stream of cash flow. 5. Diversification. Investing across different asset classes helps spread risk and reduce the impact of volatility in any single investment. 6. Compounding returns. Reinvesting earnings or dividends allows your investment to grow exponentially over time, thanks to the power of compounding. 7. Tax benefits. Some investments offer tax advantages, such as tax-deferred growth in retirement accounts or capital gains tax treatment for long-term investments. 8. Ownership stake. Investing in stocks or businesses gives you an ownership stake, allowing you to participate in the company's growth and profitability. 8 cons of investing. 1. Risk of loss. All investments carry some level of risk, and there's always a possibility of losing some or all of your invested capital, especially in volatile markets. 2. Volatility. Market fluctuations can lead to short-term losses or affect the value of your investments, causing emotional stress and uncertainty. 3. Time and research. Successful investing requires time, effort, and research to understand different investment options, analyze financial statements, and monitor market trends. 4. Liquidity constraints. Some investments, such as real estate or certain bonds, may have limited liquidity, making it challenging to sell quickly without incurring significant costs. 5. Fees and expenses. Investing often involves various fees and expenses, including brokerage fees, management fees, and transaction costs, which can erode your returns over time. 6. Regulatory and legal risks. Changes in regulations or legal issues can impact the value or viability of certain investments, leading to unforeseen risks. 7. Psychological factors. Emotional biases, such as fear, greed, or overconfidence, can influence investment decisions and lead to irrational behavior, potentially harming your portfolio. 8. Inflation and currency risk. Inflation erodes the purchasing power of money over time, while currency fluctuations can affect the value of international investments. Introducing additional risk. Understanding these pros and cons can help you make informed investment decisions tailored to your financial goals, risk tolerance, and time horizon. I hope these helped you in some way. Please like and share. You can also subscribe for more videos. Cheers!